Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Volatilities tend to get too cheap for too long. They tend to stay too high for too long as well. And I think that a lot of the deleveraging that you hear us talk about ad nauseum on television or elsewhere, a lot of that deleveraging means that banks have gotten out of the business of taking risk. They are taking as little risk as they can. What that means for us is that there is it's a better field to play on for most market makers and active investors, because the banks aren't in there running everything. There were months and years where the banks pretty much controlled everything. I mean, Deutsche Bank, UBS, Credit Suisse, these aren't bad people, folks, but they have so much capital that they can just crush the markets when they come in on one side of it, whether they're bullish or bearish. So without those guys in there, the markets can move much more dramatically, and you've seen evidence of it in the last few weeks and months. I think that continues. I think that for at least the next 6 months, if not longer, we will see an awful lot of folks actively trading higher volatility than normal. I'd say the low end, in my mind anyway, would be high 20s. You know, the absolute low end would be, I believe, 27, 28, in other words, just below 30. But I think we'll be more or less hovering back and forth across 40, Stephen, over the next several weeks and months until a big investment bank like Credit Suisse or like Bank America Merrill or Goldman or whoever reports a profit on the prop trading desk, the proprietary trading desk, of $500 million or $1 billion. Then all of a sudden all the other banks will say, see, the water's safe, we should go back in. Until that happens, however, I think until it happens, they won't do it.
That's a great point. That is a great point. Everybody wants to do something when somebody else is successful. That's a really good point. I got another question. Olu wants to know about how do you see the unusual activity? I know you guys do some really interesting stuff. Can you comment on that?
Sure. Basically, we built a system that we call heat seeker to the upside and depth charge to the downside, where we're looking for unusual activity. Unusual in that the system we needed, when I was standing on the floor as a trader, and that's what I did from 1981 till 1999. So for those roughly 18 years on the floor, I could, of course, see everything that traded in IBM, which was the pit that I traded in at the CBOE. I could see every single trade that came in there because that was the only place IBM traded. When they all of a sudden made all of the exchanges compete, and then when this upstart ISE came along and listed all these products and basically by offering a better mousetrap, the ISE just won a ton of order flow, folks. I mean, the ISE really democratized trading and made people that wouldn't have traded options, people started to come into options because the spreads narrowed dramatically because of efforts done on, to large part on places like the ISE, because they electronically could make markets in hundreds of securities. Big investment banks and big trading firms put up bids and offers on there, and all of a sudden you couldn't tell what anybody was buying or selling. Instead of standing there and having all of the information in the world at your fingertips about every single customer that bought IBM, all of a sudden I only saw a third, if I was lucky, of all the trades that traded in IBM, because 30% of them were trading on the ICE, 20% were trading on the CBOE, 10% were trading on the Amex and the Philex and the Pacific and so forth. So What we did was we built a system that would reassemble the data in the same second that the data came in, because the only way to tell if an option is bought or sold is, did it trade at the offer or did it sell on the bid? So we built that system, got some trademarks and patents on it, and then started blogging about it, and ultimately built Option Monster and then Trade Monster around that kind of look ahead into the crystal ball, because we could then follow and see that there was unusual buying activity in dry ships yesterday and again today. We could actually see it because on a second-by-second basis, the machine could tell us that yesterday during this same 15-minute period, for instance, 500 contracts changed hands in dry ships. Today, during the same 15-minute time frame, 6,800 contracts changed hands, or whatever. So the machine can do anything you ask it to do, of course, within limits. And what we do is we use 6 1-gigabyte circuits. A gigabyte is, of course, 600 times bigger than a T1 circuit. So most of you that are on the call are probably on either a T1, or if you have T3 or fiber optic, you've got a fast connection, but I'm anywhere from 200 to 600 times bigger pipe than the one that you are. So I can see actually all these trades happening in live time. There's somewhere between 80 and 100,000 quotes a second that are coming into the system. So obviously, just like if you imagined a hose, if you have too much water, you can only push so much of it through the hose at a time. The rest of it backs up. And I can actually see it all in the same second on the peak volumes of trade that the options exchanges and futures exchanges have had in the last year. We haven't got up over 0.4 of a gigabyte of data through the pipe. So when I'm saying a gigabyte, we've got plenty of room, even if everything goes to pennies, to see exactly if it's trading, how much it's trading on the bid or the midpoint or the offer. And then, Stephen, we just follow that unusual activity, looking for, okay, where is the buying occurring right now at this second? On the puts, which would be bearish, or in the calls, which would be bullish.
Wow, that's really interesting. Do you have I think you actually mentioned this, John, that people can go and sort of not fund the account? Is that, and how do they do that?
Yeah, they can actually, let me see, I'll if I write down here on the screen, can people see it then?
Absolutely.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.